Study Section 4, Control Accounts. Introduction. In Study Section 3, we learned that when a trial balance does not agree, it is an indication that errors have been made in the accounting entries. In this study section, we will examine how to trace errors in a separate ledger account, though you can prepare a control account for any ledger. The most common control accounts are those of sales ledger and purchases ledger. We will treat these two control accounts in this lecture. Objectives. At the end of this study section, you should be able to 1. Prepare a sales ledger control account and purchases ledger control account, and 2. Apply the principles of control account to any ledger. Pretest. 1. What are control accounts? 2. Explain 3 purposes of preparing control accounts. 3. Explain the meaning and treatment of contra item in control accounts. Content. A. Need for control account. In a small business organization, it is relatively easy to trace the errors because of the relatively few numbers of transactions. However, in a large business where there are large numbers of transactions, the accounting books and ledgers are many and subdivided. Specifically, many ledgers are kept for debtors and creditors. Therefore, tracing the errors might be difficult and much time-consuming. This problem can be simplified by having a system that makes it possible to localize the errors to specific ledgers so that such ledgers will be thoroughly checked to locate and correct the errors. This need is met by having a control account for each ledger that will act as a check on the accuracy of the entries in that ledger. A ledger that has a control account is sometimes referred to as a self-balancing ledger. B. Definition of control account. A control account can be defined as a memorandum account, the balance of which reflects the aggregate balances of many related subsidiary accounts. It is an account which contains the summary or total of entries in the individual accounts. In other words, a control account is a replica in summary of the accounts in the ledger to which it relates. Therefore, it follows that the balance on this account, ceteris paribus, will be equal to the total of all individual balances in the ledger. Where this is not so, it is an indication of errors in the ledger. Theoretically, the principle of control account can be applied to all ledgers, but it is usually restricted to sales ledger and purchases ledger for examination purposes. Another name for control account is total account. C. Misconception about control account. Some people think that control account figures are obtained from the individual accounts, for the figures posted to the debtors control account are obtained from individual debtors accounts. This is a misconception. You obtain the figures to be posted to the control account not from individual ledgers but from source documents. For example, you will not obtain the figure for total credit sales by adding all the credit sales in the individual ledgers but from the sales day book. D. Characteristics of control accounts. 1. Control accounts are memoranda and not part of double entry. 2. They are a summary account. 3. They are prepared at the end of an accounting period. 4. The figures posted therein are totals from the book of original entries. E. Advantages of control accounts. 1. Control account helps in locating errors. 2. It can provide a check on the accuracy of balances of the ledgers. 3. Fraud will become difficult. 4. The balances of the total debtors and creditors can be easily calculated. 5. They can be used to detect a missing figures. 6. It provides a check in the accuracy of entry in the work of different persons. 7. It provides quick total for producing a trial balance or statement of financial position. 8. They allowed homogeneous accounts to be grouped together. F. Purchase ledger control account. Recall that purchases ledger, also referred to as bought ledger or creditors ledger, is the ledger that contains all personal ledgers of all creditors. Purchases ledger keeps all transactions that relate to credit purchases as they affect individual suppliers. Thus, purchases ledger control account is also referred to as creditors control account. In preparing purchases ledger control account, you will credit the account with the opening balance and all items that will increase creditors' balance. This includes total credit purchases during the period, dishonored checks, interest charged by suppliers, etc. You will debit the purchase ledger control account with all items that will reduce the balance with creditors. This includes payment to supplier, discount received from creditors, returns outwards, sales ledger, contracts, self-off, etc. G. Sales ledger control account. Sales ledger contains the personal accounts of all the debtors. It keeps all the credit sales transactions with individual customers and how the debt balances in respect of individual debtors increase or decrease. Sales ledger control account is also referred to as total debtors account. In preparing sales ledger control account, you will debit the account with items that will increase the debtors balance. This includes total credit sales for the period, dishonored checks from customers, interest charged to customers, etc. You will credit the sales ledger control account with items that will reduce the balance of all debtors. This includes receipts from customers, discount allowed, bad debt written off, returns inward, purchases ledger contract set off, etc. Example: the following balances have been extracted from the books of Segun Limited for the year ended 31st December 2008. Opening balance in Naira. Sales ledger 12,000. Purchases ledger 20,000. Totals for the year 2008. Purchases journal 200,000. Sales journal 500,000. Checks and cash from customers 290,000. Checks paid to suppliers 150,000. Return outward journal 3,000. Return inward journal 5,000. Discount allowed 5,500. Discount received 200. Bad debt written off 150. Customers checks dishonored 60. Balance on sales ledger set off against balance in purchase ledger 1,000. Petty cash to suppliers 2,000. Bills receivable 160. Bills payable 315. Discounts allowed now disallowed 30. Service charges added to unpaid account 104. Credit notes issued to customers 4,930. You are required to prepare A. Total debtors control account. B. Total creditors control account. Explanatory notes. The accounts to be prepared are total debtors or sales ledger control account and total creditors or purchases ledger control account. You should be able to identify whether each of the items will affect total debtors or total creditors control account. After this, you determine whether the item will lead to increase or decrease in the balance of the appropriate account. Opening balance. Note that the opening balances are given in terms of sales ledger and purchases ledger, while you are required to prepare total debtors and total creditors control accounts. As a guide, you are advised to always write the order name in brackets. Since sales ledger is also the total debtors, you will debit the opening balance in the sales ledger control account. Similarly, the purchases ledger balance, which is the same as the opening total creditors, will be credited to the purchases ledger. Purchases journal. This balance represents the total credit purchases during the period. Since it will increase the amount owing to the creditors, you will credit it to the purchases creditors ledger. Sales journal. This balance represents the total credit sales to customers during the period. Since it will increase the amount owing by the debtors, you will debit this into total debtor account. Checks and cash from customers. This represents receipt from debtors. Since it will reduce the debts of the customers, you will credit it to the sales debtors ledger. Checks paid to suppliers. This represents payment to creditors. Since it will reduce the amount owed the creditors, you will debit the purchase creditors ledger. Return outward journal. This represents goods returned to suppliers through creditors. Since it will reduce the amount owed to the creditor, you will debit the purchases creditors ledger. Return inward journal. This represents goods returned by customers to debtors. Since it will reduce customers' debt, you will credit the debtors' sales ledger. Discounts allowed. This is the discount allowed to the customers to debtors. It will also reduce the customer's debt. Discount received. This is the discount received from suppliers to creditors. It will reduce the amount owed the creditors. Bad debt written off. This is the debt of customers that have been written off. It will reduce the total customer's debts. Customers' checks dishonored. This represents part of the check received from customers in part settlement of their debts but later dishonored by the bank. Since customer would have to repay this amount, to add it back to customer's debt, you will debit sales debtors ledger. Balance on sales ledger set off against balance in purchase ledger. This is also referred to as set off. It refers to the setting off of the debt due from a person against the debt due to the same person. This implies that the person is both a debtor and a creditor to this amount. This will reduce both the balance in the debtor's ledger and the balance in the creditor's ledger. To record this, you will debit creditors' purchases ledger and credit debtors' sales ledger with this single figure. Petty cash to suppliers. This is part of payment to suppliers through creditors. It will reduce the balance in the purchases creditors ledger. Bills receivable. This represents bill exchange accepted from customers through debtors in part payment of their account. It will reduce the balance in the debtor's sales ledger. Bills payable. This represents bill of exchange accepted by the supplier to creditors in part payment of the amount owed. It will reduce the balance in the purchases creditors ledger. Discount allowed, now disallowed. This represents discount formerly given to customers' debtors, now disallowed. The debtors will have to pay this amount as part of their debt. Therefore, it will increase the balance in debtors' sales ledger. Service charges added to unpaid accounts. This will increase the balance in the customer's debtors account. Credit notes issued to customers. This may be in respect of returns inward from customers or any other adjustment. It informs the customer of decrease in his account. Therefore, it will reduce the balance in the debtor's sales ledger. Solution. Debtors sales ledger control account 2008 in Naira, January. Balance B/F 12,000. Sales journal 500,000. Customers checks dishonored 60. Discount disallowed 30. Service charges 104. Making 512,194. Checks/cash from customers 290,000. Return inward journal 5,000. Discounts allowed 5,500. Bad debt written off 150. Set off 1,000. Bills receivable 160. Credit notes issued 4,930. Balance C/D 205,454, making 512,194. Balance B/D is equal to 205,454. Total creditors purchases ledger control account 2008. Checks paid to suppliers 150,000. Return outward journal 3,000. Discount received 200. Set off 1,000. Petty cash to suppliers 2,000. Bills payable 315. Balance C/D 63,485. Totaling 220,000 naira. Now on the right side, January balance B/F 20,000. Purchases journal 200,000. Totaling 220,000 naira. Balance B/D 63,485. Summary. In big organizations, many ledgers are kept for debtors and creditors, making tracing of errors difficult and time-consuming. In order to reduce the effort involved in locating errors, control account is prepared for each ledger. Thus, we have sales ledger control account, also known as total debtors control account, and purchases ledger control account, also known as creditors ledger control account. Other uses of control account include check on the accuracy of balances of the ledgers, control over fraud, easy calculation of the total debtors and creditors, ascertainment of missing figures, etc. To prepare control account, you should first identify whether each of the items will affect total debtors or total creditors control account. After this, you determine whether the item will lead to increase or decrease in the balance of the appropriate account. Then, you post each item as appropriate. This is the end of Studies Section 4. Thanks for listening.